Global pandemic, economic shutdown, massive job losses, unending protests, rioting, looting, and civil unrest. Western civilization is crashing around us. And yet, every day, the stock market goes up. That makes no sense.
Hey, this is Greg. How you doing? And today we're going to talk about why the stock market makes no sense. Okay? I know that wherever I turn, no matter who I talk to, whether it's people on the street, friends I know, I turn on CNBC, I look at Fox Business News, I look at Bloomberg, it doesn't matter where I go, the Wall Street Journal, wherever I go, not just people, but market pundits, people that do it for a living, cannot figure out why the market goes up every day in the face of all this negative economic news. And apparently, Western civilization is going down the tubes, yet the market goes up every day. It's crazy, right? It makes no sense. Well, let me tell you, if you watch this video to the end, I'm going to explain to you why it does make sense. It actually makes perfect sense. And if you watch this to the end, you're going to not only understand why it makes sense, but you're going to be able to explain it to other people. So if that's something you're interested in, stick around because it's coming your way. Hey, I'm Greg. So welcome to the channel. And on this channel, we talk about business and investment, all in the context of the digital age. So if you get value out of this video, please hit the like, subscribe, and check out the links below. And also, I'm interested in your comments. Okay, so let's get started. So one of the great mysteries of the current stock market, ever since the downturn related to the pandemic hit March 23rd of this year, which was the low, as you can see from this chart. Since then, the market has gone up about 40% from that low, which to many people, given what's happened, all of the things that have happened, it's really hard to understand how could this possibly take place. How could we get bad news every day and the market continues to go up? Well, I gotta tell you, there are some very basic things to understand about the stock market, which if you understand them, it will make sense as to why this has happened. And I'm gonna refer you to another video that I made recently called Don't Invest in Stocks Until You Learn These 5 Tips, where I go into more detail about exactly what I'm talking about here. So basically, we find ourselves in a situation after the shutdown of the economy. The Fed took unprecedented steps to bolster the capital markets, which went into complete disarray, and to also support not only the stock and bond market, but the economy. Now, to put this in a historical perspective, the Fed came forward with support in the form of what's called quantitative easing. Okay, and quantitative easing is where the Fed essentially prints money and goes into largely the bond market and purchases securities. Okay, now historically, when they did this in the 2008-2009 crash, so to speak, they were purchasing primarily government securities and mortgage-backed securities. But this time around, in an unprecedented step, when they announced it in March, they began buying not only government bonds and mortgage-backed securities, but they expanded it to corporate debt. And they went as far as announcing that they would purchase high-yield debt, which is, non-investment grade debt. Now, this was an unprecedented thing that the Fed did. They've never been this supportive. They have never been this accommodative in the history of the Fed. And what they are essentially doing is printing money. Now they're not printing money with a printing press, okay? They're not actually printing money. What they're doing is they are electronically injecting money into the money supply via securities purchases, right? And they have injected over $2 trillion. Okay, now the Fed's balance sheet was already about $4 trillion, sorry. I'm used to thinking in terms of billions, now we're thinking in terms of trillions. They were already up to $4 trillion based on the last crisis. Now they're up to $6 to $7 trillion that they've injected into the system, okay? Now, concurrent with that, the government has taken unprecedented steps on the fiscal side. And what they have basically done to support the economy in this downturn is they have gone out and borrowed money, right? Because the money's not sitting in an account somewhere and they're just shoveling it out to the public. They're borrowing this money. They're creating credit. The first stimulus package was $2 trillion. And they're talking about another $1 trillion package. Okay? And then on top of that, they're talking about $1 trillion infrastructure package. Okay? So that's another potential $4 trillion. But they've already put out 2 and they'll probably put out another 3. Okay? So you take all of this money, trillions, this is trillions we're talking about, trillions of dollars of money, and you inject it into the system, both through the economy and through the capital markets. And guess what happens? That money has to go somewhere. So when the Fed simultaneously lowered interest rates to 0, making bonds extremely unattractive, where do you think that money's going to go? You got it. It's going to go into the stock market. All right? So, you know, you may say that the stock market is fixed. You know, the stock market is being manipulated, but the important thing for you to understand is all around the world, the markets are being manipulated and to a certain extent controlled by the central banks. Okay? And I did another video that I'll refer you to, the next Black Swan event, which no one is talking about, which talks about this very subject only in the context of the European Union. Okay, so I'll refer you to that one later on in this video. You're sitting there and you're trying to equate the economy to stock market movements, and that's basically why you don't understand it. And then there's another perverse aspect of this, okay, which I learned when I was a wee lad and I first started on Wall Street. I used to ask myself, wait a minute, every time the economy goes down the tubes, the markets rally. I couldn't figure that out. Well, what happens is another perverse thing that you have to understand. The worse things get, people have been conditioned now to believe that the Fed will step up its activities, and by the way, now the government will step up their activities and come and save things. So this perverse mentality has developed over many years where, you know, sometimes they call it the Fed put. This perverse mentality has developed that the worse things get, the better things will get in the stock market because it will anticipate, and in most cases receive, further accommodation from the Fed. All right? So you can see, it actually does make sense. All right? So if you receive value from this, please hit the like, smash the bell, give me comments, subscribe, do all that great stuff so that I can keep giving you guys this great content. And I hope you enjoyed this video. And if you did, please stick around because there's going to be a lot of great content coming your way on these related issues. Thank you, and I'll see you again soon.